Welcome everybody. Sorry we're running a couple minutes delayed here, but we're off to what I think is going to be a fantastic Kingscrowd Summer Demo Day 2025. I'm your moderator and host, Scott Kitun. I am a entrepreneur for, I don't know, 15 years, an early investor. I actually sold my company Technori, of which one of our panelists has actually been on stage before, to Kingscrowd in 2022 and have helped Chris and the team developed the media and general business side of Kingscrowd over the past few years. I was a co-founder of a company called Songfinch, which scaled from basically 0 to 100 million in sales over a 4-year period, left there in 24, and are now fully back into the equity crowdfunding private online market, most recently helping Republic lead the go-to-market for the Hamilton Lane Private Infrastructure Fund. So yeah, hopefully everyone is familiar with this and familiar with me. A brief overview. This event, I hopefully do a bunch of these, but this event should be short, to the point, deliver everything we want. The idea is we're going to have 4 companies pitch. Each company will have 7 minutes to present their company, their pitch, who they are, elevator pitch, if you will. And then we'll have a little bit of time after each one for audience question and answers, which can, I believe, be conducted through the chat. I'm not sure if we're gonna be able to talk directly. That probably wouldn't work. And then, of course, I would like to introduce from Kingscrowd our senior investment analyst, Leah, who will be adding commentary and questions to the founders directly. Very shortly, we will start the presentation with Neopenda, Sona Shah, who has actually been on Technori before, as I mentioned. Then we're going to have David Coulter from ConsumerDirect and Infinity Fuel Cell, William Smith, followed last but certainly not least, AJNA BioSciences, Joel Stanley. After that, we'll have some audience polls, and we will conclude the event, and hopefully everyone will have enjoyed this and come back for more. Before we start, though, I want to make sure for those of you who are listening or watching at home, if you have not already checked out Kingscrowd and all of their usage and tools like the Edge tool, you definitely should check that out. Not only does it offer great products to look at companies such as the ones pitching here and diligence them, but it also gives you a tremendous amount of market research that you can take advantage of. And if I'm just being totally honest, we're a very small but mighty team. And so by supporting us, by becoming a paid member, it enables us to build new features and tools for you and provide things like this webinar, which obviously do not come free and cheap. So if you have not, I would love for you guys to check out and learn more about what being a paid member of Kingscrowd is all about. So without further ado, I would like to introduce Sona Shah from Neopenda.
Hi, everyone. Thanks for having me. Give me a second and I'll share my screen. All right, everyone can see my screen all right? Great. Well, good morning, good afternoon. I'm Sona Shah, and I'm CEO and co-founder of Neopenda. At Neopenda, we're transforming healthcare in emerging markets by designing affordable, life-saving medical technologies. But today, I want to tell you a story about hope and how hope represents both the urgent need and the opportunity that we're tackling. Hope was a newborn in Kenya, and she had respiratory distress. She was having trouble breathing. But she was one of 150 newborns in this ward, cared by only 2 nurses. This isn't unusual. It's a reflection of overburdened healthcare systems that are the norm in many low-resource hospitals around the world. Thankfully, Hope was wearing our NeoGuard device, our wearable vital signs monitor. It alerted the nurses when her oxygen levels dropped to dangerous levels, and the nurses were able to respond in time, stabilize her, and today, Hope is thriving. But without NeoGuard, she likely would not have made it. Hope is one of 30 million newborns in low and middle income countries globally who need intensive care every single year. And tragically, 2.5 million of those patients don't make it, largely due to preventable causes. The gold standard in care, continuous vital signs monitoring, just doesn't exist in hospitals around the world. Traditional monitors are expensive, they're bulky, unreliable, or just not built for the environments in 85% of the world's population. This is a system failure, and it's one that we can fix. That's why we designed NeoGuard. NeoGuard is a rugged wearable vital signs monitor that continuously measures 4 crucial vital signs in a simple headband. It measures pulse rate, respiratory rate, oxygen saturation, and temperature, and the vitals wirelessly connect to a centralized dashboard on a tablet provided with our system. So clinicians can look at one screen and be able to tell what's going on with all their patients. Of course, they're immediately alerted when any of the vital signs go outside of healthy ranges. We engineered NeoGuard specifically for harsh environments, for the lowest levels of infrastructure. It works through power outages, it doesn't need internet, it's dust-proof, and it cleans easily with commonly available disinfectants, alcohol. And it's intuitive. So our nurses don't have to spend hours learning how to use the product. They can quickly pick it up. We do a quick training and they're ready to go. That's why our device is staying out of the equipment graveyard that plagues so many hospitals around the world. We've already received all the regulatory clearances that are needed for our markets, including CE mark, which is the European version of FDA clearance. We're patented, we operate under ISO 1345 certification. So we've already done a lot of the hard part of medtech. We've been recognized by Fast Company, by MIT Solve, the UN, and many others, not just for our innovation, but for our impact. Recently, even the WHO has recognized the innovativeness of our solution for emerging markets. We're proud of this validation, but we're even more proud that we are saving lives today. My background started in chemical engineering from Georgia Tech. I graduated a semester early and decided to spend that extra semester as a primary school teacher in Western Kenya. Really nothing to do with engineering, but I loved my time there. I came back to the US, and a lot of the experiences, including the inequities that I had in Kenya, are what I brought forward to a pharma company. And I was in bioprocess research and development using more of that engineering background. I realized at some point that the kids that I taught in Kenya may never see the medications that I was helping make. So I went back to graduate school, and Tess and I started Neopenda during a biodesign course that we took at Columbia University. Since then, we've built a global, like-minded team with deep expertise in engineering, operations, sales, and marketing in traditionally tough markets. We're not outsiders in these markets. We're partners with the clinicians and the communities. What unites us is a shared belief that patients like hope deserve better, and we can deliver it. We've launched commercially in Kenya, Uganda, and Ghana, where we sell NeoGuard in packages of 5 to 15 wearable devices, and on each sale, we see over 50% gross profit margins. But is there really a viable market in Africa? Well, in Kenya, there's 13,000 health facilities, 13,000 in Kenya alone. So we're just getting started. These are facilities that are actively demanding, actively seeking cost-effective, reliable tools like NeoGuard that can improve patient outcomes and reduce the clinical burden. Our initial focus is on neonatal care, and it proves that we can meet the needs of the highest risk use case and arguably one of the toughest use cases. We've already onboarded over 50 hospitals who have purchased devices from us. This isn't charity, it's a business with a strong foundation in real demand and long-term growth opportunity. Through a land and expand model, each of these hospitals can grow and adopt our technology for pediatric and adult use cases, which increases our revenue opportunity by 27x from each facility. We're also launching a spot monitoring product called NeoSpot for outpatient and rural communities using the same core platform. This is how we grow deeply within our facilities and broadly across markets. And it gets even better. Next year, in 2026, we're launching NeoCloud, our software platform that turns vital signs data into actionable insights. Clinics will now be able to analyze patient trends, identify bottlenecks, and improve care delivery. In a world where decisions are often made based on gut feelings, this is a massive leap forward. We're addressing a $3.4 billion vital signs monitoring market in Africa. $3.4 billion, and that's Africa alone. Just think what we can do when we expand to 85% of the world's population that lives in emerging markets. We've already entered with a high barrier use case, and we've proven that our model works. With strong demand, proven traction, and smart expansion, we're positioned to become a category-defining leader in our space. We've already raised $6 million to date, half from competitive global grants like Cisco, Wellcome Trust, Grand Challenges, the UN, amongst many others, and the other half from aligned investors ranging from angels through institutional investors. Now we're raising a community round to scale both our impact and our profitability. We're on track to reach $1 million run rate by mid next year, expand across patient types, and improve care for 10,000 patients globally. We're raising this round to make sure that patients like Hope don't just survive, but thrive. Every patient deserves timely, quality care, regardless of where they're born. With your investment, we can make that future real. Invest in Neopenda. Thank you so much for your time, and I'd be happy to answer questions.
Awesome. Thank you, Sona. Great job. Are we going to bring on Leah to ask a couple of questions or lead conversations with the audience if you want to throw it in the chat?
Thank you, Scott. Yes, so I'm a senior investment associate at Kingscrowd for the last 4 years now. And so my colleague Teddy and I review every single deal that are raising online. And I've already spent countless amount of time looking at each of the deals that are here today, especially Neopenda. And the main question I had for you, Sona, you're trying to target several countries in Africa, and we know that each country had different regulations, laws, currencies. How can you do to adapt and really scale through so many different states?
Thanks, Leah, and that's a great question. So it's from a regulatory perspective, we've received one of the most stringent regulatory clearances in the world, CE mark. It's the European version of FDA clearance. That essentially gives us a stamp of approval to launch in most markets that we're operating in. So sometimes our countries have their own local regulatory authorities, but it becomes a checkbox activity because we've already done stringent regulatory clearance. That's why we've been able to launch in 3 countries and have plans to expand to 10 in the relatively near future. The product itself has been designed for the lowest levels of infrastructure, so scaling our product across countries is not really a challenge for us. Where we see more of the consideration is around supply chain and sales and marketing. We've identified that across African countries, there's 54 of them. There's about 3 to 4 different profiles of countries in terms of how they do their sales and marketing. For example, Kenya, the 13,000 facilities that I mentioned, it's about 50-50 split between public and private. We have a huge opportunity to go door to door to our facilities, and that market is massive. But in a country like Uganda, it's more governed by your Ministry of Health, government, or NGOs. So that's more business development. It's larger orders, longer sales cycle, but larger orders. And so it's a slightly different structure than Kenya. We're in that really fun transition to scale phase where we're building a playbook. So those 3 to 4 profiles, we're actively scaling across them, and that will enable us to scale across 54 geographies in Africa relatively quickly, and then globally beyond that. So it's more a consideration of sales and marketing, and then supply chain, which we are building local capacity on the African continent for supply chain, which will not only boost the local economy, but also reduce our COGS by up to 30%.
I'm sure that many people are wondering, do you have to go regularly to Kenya, for example, or do you have a team already there taking care of the sales for you?
Both. I care very deeply about the markets that we're operating in. So I typically go about 3 to 4 times a year. And beyond that, we've got an incredible team that is locally based. We've got 10 full-time team members, plus many more sales and customer support representatives. But 3 of the 10 are based in Kenya. That's more on our business development or customer support. So they're an extraordinary team they're local, they're Kenyan, they know these markets, they've grown up with the challenges that we're experiencing. So we're able to bridge that gap across different cultures and to really bring something that our communities need.
Amazing. I'm also wondering, does the competition market look like? Because it seems that you're kind of tapping into something that has not really been done before, but I know there are a couple companies also trying to get a share of that market. So can you tell us more about that?
Absolutely. So when we think about competition, when you think about vital signs monitoring, that's been around for decades. We didn't invent that. So you probably are envisioning your big patient monitors that exist in hospitals or movies. Those monitors, even if they get donated, they end up in the equipment graveyard that I mentioned because they require continuous power or internet, or there aren't locally available spare parts. I once had a nurse tell me that there was a fully functional unit, but the instruction manual was in German, so she had no idea how to use the product. And so for a lot of these reasons, we don't find a ton of those traditional monitors. And by the way, they cost 10 times more than what we charge for our product. So one or two in your nicest private hospitals, that's all we find there. The second bucket of competition that we see are products that are designed specifically for emerging markets. During COVID, many of you were probably exposed to pulse oximeters. It's the finger clip that they put on you when you go to the doctor's office. That is readily available, but we're comparable in price point and offer more than double the functionality. So again, these handheld pulse oximeters are taken from patient to patient and monitoring kind of a spot checking once every 3 hours. That's certainly not sufficient to detect when a patient is actually in distress. So really what they're doing right now is manual measurement of vital signs. So what we view as our competition is actually not other equipment because it doesn't exist for these markets. It's really just the manual measurement of vital signs, displacing this normal standard of care. And that's the adoption barrier that we've worked hard to work with our nurses on.
Amazing. I know that you started that company a couple years ago. Can you kind of explain to investors what has been the development process and what makes that now you are already starting to generate revenue? What were kind of the difficulties that you faced along the way?
Yeah, of course. And I think a lot of us that are familiar with pharmaceutical products, for example, we know that it takes over a decade to get a product to market. It's similar for medical devices. There's a pretty intensive R&D process that ensures this isn't just a device that, is good enough for a class project where we started. This is a device that is going on patients and has the ability to help save a patient's life. With that, there is stringent regulatory development, not only building a platform for our vital signs monitor, but building ISO 13485 certification. So a robust quality management system that allows us to replicate this for future products. Then we spent about 1.5 years in product market fit. Now that we got regulatory clearance, how do we actually sell this to our customers? Who's our target customer? And will they actually like the product? Commercial use of product is often different than clinical use. And so we spent about 1.5 years doing that. So really in Q3 2023, that's when we really started to transition more into our business model. It's going directly to our facilities, engaging with local distribution partners to amplify the work that we're doing locally with our sales freelancers. So with that, we've only been commercial for a couple of years now, but now we've got a proven sales model. We've again sold to over 50 hospitals. So now it's time to scale what we're doing.
Amazing. Thank you, Sona. Scott, please let us know if you have more questions for Sona.
Yes. All right, I'm back in. Yes. So I want to ask 2 questions that are coming from the webinar chat and remind everyone who is participating. If you look down at the bottom of your bar, right down here, you'll see a little question chat thing that says Q&A. If you put your questions in there, that way everyone who's participating can read it and see it in real time versus just those of us who are seeing this on the side panel. The questions that were asked, there's been 3 by Jake, who's firing them away here, keep them coming. What is Neopenda's burn rate and current revenue, whether it's current from past year or current as in like where you're tracking ARR wise?
Yeah, great question. So we're at about 50 to 60,000 in terms of monthly burn. I will note that about half of that is going to R&D expenses, which are often funded by our grants. So investment dollars really only go towards scaling what we know to be proven, and that's about 30,000 on a monthly basis, 25 to 30,000. In terms of revenue, since we transitioned to our business model, we've generated about $200,000 in revenue over the past couple of years. Right now, our business model is a capital expenditure to the facilities that, as I mentioned in the presentation, we have the opportunity to, it's a land and expand model. So once we convert a hospital, we have the ability to upsell the hospital both with existing product and with the NeoCloud platform that I mentioned before.
Very cool. Awesome. I guess one follow-up here real quick, and then we'll move on. So do you see profitability as like something that's coming short term, or is it something where it's like, hey, we, given the land and expand model, it's like, hey, we know when we take on a new market, this is going to cost us this. And then our anticipation is to set the time clock again to be profitable per land location? Or do you view it as like right now, like you can get to profitability with one hospital and then from there on out, it's not?
Yeah, we've got our sights on profitability by mid next year.
Okay.
So we've recently received a $1 million Canadian grant from Grand Challenges Canada. The entire focus of that project is to get to profitability in Kenya, because of the way that we operate with grants funding R&D and investment dollars going toward, and revenue, of course, going towards scaling what we know to be proven. We have a very clear pathway to profitability given the current market landscape that we're looking at. So profitability next year, which we're really excited about. And then from there, it's how do we scale as quickly as we can.
Awesome. Great job, Sona. Thank you.
Thank you so much.
All right, let's move on to David from ConsumerDirect with your presentation.
Hi, good morning, folks. I hope you all can see and hear me. I am David Coulter. I'm the CEO of ConsumerDirect, and we got a great company here. We are a profitable fintech company revolutionizing how consumers prepare to get a better loan and save money. And we have a very bright future as we get into lending. I have a brief deck which I'm going to share my screen here. Hopefully this will work. All right, so ConsumerDirect, we did a pivot in 2017 to sell our consumer products that help people with their credit, money, and privacy. And we haven't looked back. We've been profitable every year since then. We've been growing every year since then. And our projections show that we'll do 128 million this year, and we are considerably ahead of that. But what we do, and we're very passionate about, is helping people get a better loan and save money and stop the spread of their data. And as I go through this and explain it, you'll see why our future is very bright as we now turn towards getting people the loan that they want. So why are we doing this? Well, the financial system is really stacked against consumers. Most people don't understand their credit score. Most people don't understand the timing of the drivers, and they're just grateful for a bank to approve them. Even if you have a good credit score, that's typically what happens. The banks have the power. The banks charge the interest rates. It shouldn't be that way. We want to return the power to the individual by helping them prepare for the better loan, and we're very successful at that. And so there's 93 million people that are below a 700 credit score. And these type of subprime and near prime people are ideal for our services to help them get above 700, get a better loan, etc. And it turns out that many Americans are paying 2 times the amount of interest and fees that they should be paying. What our data shows is that the average American has 40 to 90 points they can add to their credit score in sub 30 days. They just don't understand how to do that. That's where we come in with quick education. Here's what's helping you. Here's what's hurting you. Here's the action buttons and things that you can do DIY to accomplish it. And our technology, we have 22 granted and issued patents. We're very proud of that. 2 of them, 2 segments in particular of our patents. One is we have a direct connection to over 70,000 financial institutions, debt collectors, utilities, etc., for people to ask questions, solve problems, deal with issues on their credit report, their online banking, and so forth. And very importantly, we have 2 patents granted around the future credit score. We're the only ones that took on the future credit score. Wouldn't it be great if you could log in 1 minute, see your current credit score and your future credit score, and then the DIY tools to get there and how long it will take you? And that is life-changing. And so the average member goes up 34 points in their first 30 days and approximately 71 over 12 months. And that is life-changing. That can make the difference between offsetting the increase in grocery prices. That can make the difference between getting a home or not getting a home. And we estimate that we have saved our members over $3 billion in unnecessary interest and fees just on auto and home loans. And our members have added 23.8 million credit score points. And we really are passionate about keeping people private, and there's all these data brokers selling their information and identity theft and things like that. We've been able to have 3.2 million member profiles removed from these data brokers. So people come in, they prepare for a better loan, they get a better credit score, they understand their online banking better because we bring that in too, and they're able to be more private. So those are things that really help people. And we have this amazing Max AI engine that we've built and continue to build. And what is important for an AI engine is the amount of data that you're getting. And we're getting up to 9,000 data points per customer. So we understand our customer, we understand their risk factors, we understand their needs very well. And our Max AI engine is really something very unique in our segment. And here's the real point I want to hit home today. We are profitable. We are growing. And we've been profitable every year since 2017, bootstrapped. We don't have any venture capital, private equity, or family funds invested in ConsumerDirect. And we've been able to use our money and grow tremendously. And last year, we did over $100 million in revenue with 10% EBITDA. And we have an outstanding 88% gross margins and 44% gross revenue CAGR. And where does that revenue come from? So the consumer pays somewhere between $15 to $30 a month, and we have 3,800 active partners that we're paying commissions to just last month who go out and sell this to consumers, integrated into their services and so forth. And we have a net active base of well over 300,000 net active customers. And so we have our primary product, which is Smart Credit. We also have another product, Hogo, which focuses on privacy first. And then we have another product called the Lending Score. So ConsumerDirect has these three great products, and we primarily sell it through our partner distributions. Now, because we see all of these different segments that we're interacting to, we are getting the next step in the lending. And why are we getting in the lending? Because we bring people in, we prepare them for a better loan, and then they go get a loan elsewhere to the tune of $20 billion in lending activity just last year alone. And we're not getting our 4 to 8% commissions off that. Well, that's going to change. And so we're going to get into the lending market. And we are very passionate about getting people a better loan, unlocking the deals, and saving money. And so we are going to change lending in America forever. Get a better score, get a better loan. You come in and you find out in 1 minute where your future credit score can go and the tools to get there, and then we get you the loan. And that's our future. So with what we're doing right now, we've been growing tremendously. We're adding huge value to customers and saving them money. And now our future is to get them into the loans. And people love our products. We get amazing reviews. If you look at SiteJabber, if you look at the reviews on our website, we're getting 5 stars. They love what we do because the bottom line is we're really helping people. And we have a tremendous leadership group here at ConsumerDirect. So just to recap, we've got a profitable company, a growing company that helps consumers better their credit, better their money, and get more private. And that leads to people getting a better loan and saving money. And our future is getting into the lending as we work very hard towards a possible public listing. We already have our ticker symbol. We're PCAOB audited. We have passed all the other compliances. We're working on our S1, etc. So with that, I'll turn it over to questions.
Well, thank you very much, David, for your presentation. First question for me that kind of comes to mind is I know that you had your last raise online that closed in March 2024, and you had a pretty good success. Many people, whether from Kingscrowd or outside, investing in your raise. Can you kind of summarize what are the progress that you've made since that last round, and why should people who backed you already in the last round should keep backing you now?
Yes, so we had an amazing first quarter in 2025, and we beat it again in the second quarter. Every month this year has set a new record. In June, we're Rule of 50, where you grow 40% YOY and maintain over 10% EBITDA. We've been doing all that ourselves. The raise we did in 2024 and what we're doing now is really not the money. We don't need the money. We need the shareholders, because we have to meet certain requirements for a listing to get over certain shareholders and round lot numbers and so forth. So that's why we did it. And it's not a formal venture capital round or private equity round. But we have grown tremendously. We have done it without those investments. And we are continuing to show a proven ability to grow, a proven ability to offer consumers a fantastic product that helps them. And that's what we're really excited about. We're really excited about helping people. And everyone in the company is a shareholder, and everyone participates. And so it's in our DNA to continue to help as many people as we can. So that's what drives our growth. And it really shows in the ratings we get for our products.
So I want to think a little bit longer term, because you've said it several times. You're hoping to be able to enter the public market very shortly. What's your strategy behind that decision? What motivates you to want to IPO?
Yes, great question. So our core business is helping people prepare for a better loan. That continues to grow. It's growing better than expected, and we see our growth continuing far into the future very rapidly. What we're excited about is buying some lending shops, bringing in their expertise, their licenses, their connections to the banks, and integrating that into our services so we can then provide people the lending and connect them to the bank and have the bank approve them, and we get our commissions on that. So not only are we growing and accelerating in our core business, but we have a desire to be a public company, so we have the currency to go out and buy these lending shops, which will add revenue to us, which will add abilities for our consumers to get the loan as an all-in-one place. So next year, we hope to be properly primed so that we help people get a better loan, and we get them that better loan. So we're making money as we help them prepare, and then we're making money on the loan. And that will change lending in America forever. Think about this. Consumers now have a place they can go, and they see their credit score at a 600 and what they can get for the lending products, and then they can see they can go to a 700 in sub 30 days and look at the savings they will get. And I think Americans will appreciate that, because right now that doesn't exist.
My understanding is that you're going to try to connect your customers with banks to kind of facilitate the access to loans. Is that going to make you enter into new, highly regulated territories? What are kind of the challenges that you're going to have to overcome to be able to implement this next step in the development of your company?
Yes, we're very well versed in some stringent compliance and regulation needs. We meet all of those now. There are going to be new regulations and requirements as we go into lending. We are preparing the company for that now. We're very well aware of it, but that's also part of the reason why we want to have a currency to go out and buy some of these smaller lending shops, and there's some that we've already identified and targeted, some that we're having discussions with as well. And they will bring in the expertise, they will bring over their license, and they will ensure that we are compliant and move forward with their knowledge and expertise. And that's part of the reason why we're doing that. That will help jumpstart it instead of building it ourselves.
That helped, thank you. I see a lot of great questions coming from the chat. The first one from Lola is related to competition. She asked, most credit agencies have credit simulators. How is your future credit score tool different? And did you say you have the only credit simulator?
Yeah, no, we have the only future credit score immediately when you arrive. Our AI engine identifies where your score can go, the steps necessary, and how long it will take you to achieve that. And that's different from the other credit score simulators. They were big about 10 years. They aren't really used that much. But you say, okay, well, what if I pay down my credit card $5,000 here? What if I file bankruptcy? What if I do this? What if I do that? So that's a Q&A process that people go through. And the research has shown that people just throw in a lot of what ifs into those simulators, but they don't actually do it. Here, contrast that to what we have, and it's patented. Our future credit score, you see that immediately when you log in, and you have the tools to achieve it. And there's a simulator where you can play around with different ideas. What if you only get up to half the points you can get or go all the way? And it's very fun and interactive. And I'll tell you another thing, you can think about us different from competitors. We're the interactive guys. The other competitors, for the most part, are just read-only information, or you got to plug in information like we were just talking about. We have 81% of our entire membership base logs in at least once a month. That's greater than online banking at 75%. So we're doing something right. People come in, they use our action buttons, they play around with where their future credit score can go, and they push buttons in order to become more private. So it's a very fun combination between finance and gaming, and that is really resonating with consumers, especially with our Hogo product.
I think that we're up in terms of time here, but maybe in 30 seconds, can you tell us how do you compare to Credit Karma, that is a free service?
Yes, this is my favorite question. You know, Credit Karma, frankly, doesn't give a damn what your credit score is. They will make you think that you're the smartest person in the world for getting a loan at a 580 score, and they will literally fire off fireworks on the screen and you feel great. But you know what? You got a terrible deal. We don't like that. We like to say, stop. You can go from a 580 to a 650. And here's the savings you can have, and you can get a better loan. You know, a lot of people in America don't know a lot about their credit score, but they know the higher the better. And so we don't want people to get a loan at 580 unless it's a medical emergency or something like that. We want people within sub 30 days to know where they can go and get a better loan. And that separates us from Credit Karma and literally everyone else. And that is a very unique feature that ConsumerDirect offers through our products.
Amazing, thank you. I'll let you answer the other questions on your own. And Scott, I think we're ready for our next presenter.
Okay, thank you very much.
Without further ado, I would like to introduce William Smith, who is going to give a pitch for Infinity Fuel Cell.
Okay. Thank you, Scott. Thank you for to Kingscrowd for the opportunity to share our company with you and what we've been doing. I think, by the way, that last presentation was terrific. It's quite an act to follow. But I'll share my screen and be able to tell you a little bit about our company and what we've been doing and where we're going with it. We are Infinity Fuel Cell and Hydrogen Inc. This is quite a bit different than the last presentation. We're focused on developing various technologies, working with NASA and other entities like that, and bringing that technology down to Earth to help enable a carbon-free future. And of course, there's the mandatory statements about forward-looking statements and the Securities Act, and this will contain some of those statements. First of all, what do? We design, build, test, and deliver complete fuel cell electrical power generation systems for spacecraft, aircraft, and underwater vehicles. And I won't get into the details of the technology, but fuel cells allow you to take hydrogen and oxygen or hydrogen and air and make clean electrical power with the byproduct water. And if you happen to be in space, you can drink that water. We also design, build, test, and deliver the reverse reaction, complete electrolysis systems. We do that by taking electricity from renewables and using that to generate green hydrogen by electrolyzing water, taking good old H2O and taking apart the hydrogen and the oxygen. And, you know, reasons to invest for us, you know, we believe we have the right team, the right markets, and competitive advantages and traction for our products. We've had over $50 million in past and current contracts. We have a highly experienced team with extremely talented core of newcomers as well. So we have a good balance between experience with these products and these markets, but also the energy and the passion of the young folks coming on board. And these markets that we're after, they're large. They're very large. You know, we're talking about the global space markets that you read about all the time, and we work with those folks. Also, green hydrogen generation globally, using hydrogen as a way to help decarbonize many different industries, from transportation to industrial industries such as fertilizer manufacture using green ammonia. And also a very core area right now is providing power systems for new generations of underwater drones, underwater vehicles that various countries and commercial entities are looking at to apply to around the world in the very near future. Now, the markets, the characteristics of these markets that we're going after, all of them have massive growth potential. And these are high margin products. We're not competing with commodities. Typically these are very demanding applications, and we can meet those demands. And there's high barriers to entry for competitors in terms of basic performance, quality, qualification, patents, and trade secrets. And to give you an example, if we're operating fuel cells in outer space, there's an entirely different set of requirements to do that than you'd have if you operate systems on the ground here where there's gravity. And we have that experience. The macro environment right now. Obviously, the world has been changing, especially with this new administration. But our segments, our primary segments that we're currently active in, have been relatively unaffected. Now, that can change in a minute, but our space applications remain strong, where we're looking at providing life support systems for operation on new generation space stations, commercial space stations, and providing life support equipment on the surface of the moon and power generation on the surface of the moon. Department of Defense contracts that we have, they remain strong. As the world sometimes gets to be a more dangerous place, people are looking for systems that can help address the challenges they're seeing globally. But it's also commercial underwater, everything from pipeline inspection, cable inspections, even inspections and mapping of areas around wind towers are being placed in the oceans. And there's other growth pathways emerging from those core segments. Importantly, the demand for clean energy, despite what might be going on in the news locally, demand for clean energy around the world and decarbonization globally, that demand remains. And what we can do is that we can provide ways to generate clean hydrogen, green hydrogen from photovoltaic power, from wind power, and help decarbonize very difficult to decarbonize industries. Our current raise status, recently we've completed a small $1.6 million round. That was about a 6-week effort culminating at the end of June. Total of about a little under 6 million raised from the end of 24 to now. We're anticipating a possible Q4 Reg C follow-on with a planned Reg A in 2026. So we are right now, if it was a couple of weeks ago, you could invest, but right now you can't. But we are getting ready for the next phase, and there's a link at the end of the presentation that takes you to a location where you can learn more. Now, our products and solutions, and this, why would anybody want a fuel cell? What does it do for them? And this is, we're talking about really out of the world applications. But one mission example, if you want to survive the cold lunar night, how do you do it? It's very, very difficult to do it with batteries. You read all the time about somebody lands on the moon and then they die during the night. But NASA is looking toward using our combination of our fuel cells and electrolyzers to replace batteries. And we're funded to do that now. We have contracts with NASA and also contracts with very large commercial prime contractors to develop this technology. And to give you an example of why, without getting into too much detail here, but it shows you on the right-hand column the savings per mission for a fairly low power system on the surface of the moon. And NASA, this is a NASA chart, it's not my chart. It projects to be a savings of up to $720 million, depending on where you are on the surface of the moon. So you don't have to install too many of these and you have enormous savings. So that's why there's such a push among the primes and NASA itself. And how are we doing in general of product development and addressing this market? And what's shown here is a program we had funded by NASA to develop and prove out our technology in actual space flight. And this was a subscale system that we developed and tested at NASA Johnson Space Flight Center and flew on suborbital flights on Jeff Bezos's Blue Origin company's New Shepard rockets. And this is some of our baby pictures flying aboard NS-24, which was New Shepard 24 mission. We were one of the experiments in the top of that capsule on the top of that rocket, and it did its suborbital flight, experienced zero gravity, and performed flawlessly the entire time and came home to us, and it's actually on a table right behind me. The data was perfect, this operation was perfect, and it's allowed us to move forward. Underwater, this is some pictures of one of our latest underwater systems, and this is out at an underwater integrator right now. We expect that to be going to sea very soon. And then again, this is taking renewable resources, taking sunlight and making clean fuels, clean industrial raw materials, clean hydrogen. This is a program, oddly enough, that came out of the Department of Defense. It was funded by the Navy to develop a mobile microgrid that can be used by deployed forward expeditionary forces, but it can be used for any other purposes as well. It's very rugged and can be deployed worldwide. And what we're doing with the funds right now that we've been raising, in addition to our contract funds, these contracts can be very large, can be very profitable, but they can be very episodic, and there may be times where you need to bridge gaps and you want to keep continuing the product development. So we've been hiring additional personnel, developing design improvements, proving out life and performance, and also investing in plant and equipment to support that. And some recent events, we recently completed a 2,600-hour life test of a NASA item. We completed another addition to that contract, and we expect a further addition next week. We have that commercial lunar contract that I mentioned, that's on track and ongoing right now. And we have 2 different underwater vehicles that should be going out to sea in the next quarter, in this quarter right now. And our R&D activity is on track, modular designs, cost reduction. Even for these high margin products, you have to be able to meet the target cost, but they're pretty interesting margins if you can do that. And we've been able to squeeze more performance out of the systems that we've already built by developing the core part of this. It's called the membrane electrode assembly that actually supports those reactions. We've been developing advanced versions of that allows us to have major increases in performance, and increases in performance can reduce cost per unit. So to summarize, we believe we have the right team, we have the right markets, and right now we're transitioning to production for these large and rapidly growing markets. And I have to say that many of us are passionate about how we can use these technologies that taxpayer dollars has paid for NASA to initially develop them, as we bring them down to earth and help not only this company grow and these applications grow, but help to look to a future where people can be optimistic about their energy environment, their energy security, and their climate change, their global environment. So that many of us view this as a step, our small step that we can make to help make the environment better for the generations to follow. And there's information here for contact information for myself, and then for the Invest Now link, which will take you to a site where you can learn more about the upcoming investments, but it's not active right now for investment. But thank you very much, and be happy to answer any questions you might have.
Thank you, Will. So we have one question for you. You raised about more than a year ago online. Can you kind of tell us what are the progress that you've made since your last raise?
Yeah, since the last raise, we focused those funds on product development. So we have a new generation of lower cost, easier to manufacture cell stack. They're called cell stacks when you take these elements and stack them up. And that development is on track. And that cuts the number of components inside of that cell stack in half, and it allows us to double the unit output per cell by advances in the membrane electrode assembly. So that the money has been focused on doing that. We've also used some of those funds to refine and advance the systems, so that we have an excellent team of electrical engineers, software engineers that have been able to tune the systems to the application and make it more and more independent. These systems will go unattended for weeks or months at a time in severe environments. And we've even started implementing AI to help anticipate what it may find in those applications and in those missions, and take the proper actions as it encounters them.
Great. Thank you very much, William. We appreciate it.
Thank you.
All right, folks, we are going to move on to our last, final, and incredible pitch. Joel Stanley from AJNA BioSciences. Please set your slides up now.
All right. Thank you for having me. Those are some great pitches, great companies. Enjoyed watching. Okay. AJNA BioSciences. My name is Joel Stanley. I founded this company in 2021, and it is really to develop some of the world's first natural pharmaceuticals, also known as botanical drugs, through the FDA framework. We're starting with central nervous system disorders such as autism and generalized anxiety, which I'll get a little bit more into. My background is important to what I'm doing. So I was the founder and CEO of Charlotte's Web, which was really the first and still is the largest known brand within CBD. And it started with the story of a little girl named Charlotte. She was 5 when I met her, had very catastrophic epilepsy, 300 to 400 seizures a week. We made a fairly simple plant extract for her, high quality, and her results were quite astounding. And that was followed by thousands of people. And CNN's Sanjay Gupta picked this up. And it was really what I learned at Charlotte's Web that taught me how powerful plant medicine can truly be when it's done right, when it's standardized appropriately. So I led Charlotte's Web through its successful IPO in 2018, raised a ton of money there, moved to the board. I stepped off the board of Charlotte's Web to start this company, AJNA BioSciences, in 2021. So we're a little over 4 years old. Just some of the highlights of the company. We have raised over $28 million to date. Keep in mind, this is biotech. We run clinical trials. We are a mid-stage clinical development biotech company. So it is very capital intensive, including from the 28 million raised to date. We do have 15 million supporting our lead candidate from a Fortune 500 company. We also have a DEA Schedule I license, which is very important. Very few of those have been given out. We have completed construction on a state-of-the-art custom-built laboratory for our design. I'll talk a little bit about the first 2 drugs in the pipeline a little bit later in the presentation. But suffice it to say, every drug in our pipeline, we have 4 presently. Every drug in our pipeline is solving a large unmet need in a botanical way. Zooming out, the main problem we're solving with AJNA BioSciences is that people really do want botanical options. They want more natural drugs. They're tired of the synthetic side effect chasing loop, but we just don't have any. In fact, only 4 FDA-approved botanical drugs exist to date because the regulatory is so new. So we merge the worlds of what people really want. That's more natural health options with what their physician can legally prescribe by moving natural drugs through the FDA process. And we built a platform to do that, not just with these first 4 drugs in the pipeline, but to continue to bring natural medicine to pharmaceutical grade through the FDA, covered by insurance in perpetuity. This wasn't possible until very recently. Modern technology, mass spec technology, as well as brand new regulatory pathways have just started to allow botanical drug development. This is one of the largest industries in the world, and we're moving some of the first natural options into it. So I think we're going to be highly disruptive in the coming years to the pharmaceutical industry. Now, in order to access that market with botanical drugs, you have to get certain things right. There are substantial barriers to entry. First, conventional laboratories are not set up to develop botanical drugs. They're used to single molecules, synthesizing drugs, not having a full plant spectrum within their drug. Chemistry manufacturing controls, or CMC, this is FDA technical speak, and this is one of the hardest parts of our job. This is one of the reasons why we're one of the few people in the world actually doing this, is we have to characterize the molecules in our drug. Most of our pharmaceuticals are single compounds, so that's a fairly easy task compared to some of these plant extracts and fungi extracts that can have sometimes hundreds or even thousands of compounds in them. So we built our core competency to pass this step. Then regulatory sensitivity, regulatory approach for any pharmaceutical is very important, but especially when the regulatory pathway is brand new. And I'm just going to highlight one of our team members, Zhenhui Dao. Zhenhui actually spent 17 years inside the FDA, and he was the primary author of the FDA's botanical drug development guidance to the industry, meaning one of our team members literally wrote the book by which we move these complex botanicals through the FDA. Then clinical expertise. This is very important. You have to have the right key opinion leaders in the indications you're choosing, in the disease states you're choosing. I'm just going to highlight Dr. Oren Davinsky. He is our chief medical. Dr. Davinsky was the lead principal investigator for a drug called Epidiolex, which is really the only cannabis-derived and only CBD drug approved by the FDA. So he designed the hard part, clinical trials, which this is what most people think of drug development. The hardest part is clinical trials. For us, it's chemistry, manufacturing, controls, and then everything else is the same. Phase 1, phase 2, phase 3, then FDA review, and hopefully approval. So these are the barriers to entry that we've built our core competency to be able to do what we're doing in the world. One thing I'm going to highlight, there are many advantages of botanical drugs over conventional drugs, but the one I'm going to highlight is really its intellectual property paradigm. It is extremely protected by a natural moat. So not only do we have plant patents and process patents and indication patents on the specific disease states we're entering, also the drugs we're making are so complex that you really can't genericize them. So there's no generic cliff to drugs like this, and there are other precedents on the market to demonstrate this. So this is what I think investors get excited about the most when it comes to our IP. We do have 4 drugs in the pipeline. Each one of these is solving a large unmet need within large indications. And I'm just going to spend a moment on a couple of them. Drug number 1 in the pipeline, this one is moving into phase 2. The FDA has cleared this into phase 2 for autism spectrum disorder. The reason why this drug is so important to that community is that only 2 FDA-approved drugs exist for this community, meaning really only 2 drugs are usually covered by insurance. Both of these drugs have very toxic side effects. So we come in with a full spectrum botanical solution that, by the way, because I come from Charlotte's Web and I've been working on this for over a decade, we actually have anecdotal, statistically significant data brought together by Johns Hopkins, who we partnered with early on, that shows that this drug, AJA001, has shown statistically significant improvement in both anxiety and depression within autism spectrum disorder. And it's very rare that you get to move into a phase 2 clinical trial, phase 3 clinical trial with this level of efficacy data. And then, of course, we have a ton of safety data, which when we completed our phase 1 for this drug last summer, showed that the drug is also highly tolerable and very safe. And we understand a lot about how it works in the body. This drug is on schedule to be approved by 2030. And this is a very conservative forecast for this drug. We actually have another forecast that was done independently by a very reputable firm called LifeSci, but I chose to use this one. It just goes to show that if we get this drug approved, it has massive blockbuster potential. And I'll show you just a little case study benchmark to prove this out. So the drug Epidiolex was approved in 2018. And this is the only CBD drug on the market. It's basically a single molecule. Epidiolex was approved for less than 130,000 people, yet today it does almost $1 billion net annual revenue. These are 2023 numbers. 2024 numbers are actually updated in the next slide. It actually does $972 million with a very narrow indication set. Autism with irritability, our indication we're going into, has over 7 million people, but we've conservatively cut into that to adjust for irritability, which is the primary indication, is irritability associated with autism. So you can easily see this drug's potential just within the one indication of autism spectrum disorder. Drug number 2 in the pipeline is a psilocybin candidate. This is one of the reasons why we need our DEA schedule and license. It's basically, we believe, a better, more natural antidepressant than everything we have on the market that have created a big trap for people. It works very similarly, but it is just safer all around. Lower toxicity, lower dependence potential. So we think that's going to be a revolutionary drug. It's on track to be approved in 2031. And again, conservative estimates within the indication give it great blockbuster potential. We do have drugs 3 and 4 in the pipeline, but I'm going to skip them. Fantastic team, truly all-star roster to do what we're doing. Just a little bit of our history and about our fundraising. I did mention we've raised over 28 million to date. We are in a community fundraising round. You can see that on Start Engine, and any institutional investors, any accredited investors that want to learn more about maybe our Reg D raises, please go to our website or send us an email. But just to show, it's a lot of money to raise in 4 years. To show these milestones in the best way, to be 4 years old and have a clinical phase 2 FDA investigational new drug on file is substantial. And to be prepared behind it with a clinical phase 1 drug, and drugs 3 and 4 will be shortly behind it. And that's a large part of our use of funds. So put simply, we're combining what we've always known as medicine for many, many centuries, combining it with modern technology to create a whole new class of drugs that I believe we actually want.
Amazing. Thank you so much for your presentation, Joel. I did have the chance to visit your facility a couple months ago, so thank you for having me there. And I think one of the things we discussed that I want to bring up here is that you actually had a crowdfunding run very recently. It closed in October 2024. And in kind of this last 9 months, what are the progress that you've been able to make, and why should investors who back you then should back you now as well?
Hey, that's a really good question. So yes, we ran a crowdfunding campaign on WeFunder, went really well. We did kind of a short run. This one might be a short run as well. And I'll just say first off, part of the reason why I like doing crowdfunding is that I believe what we're doing is important. Lots of retail folks really believe in it. The majority of this is drug development. It takes, as I showed, millions and millions of dollars for us to raise. So the majority of what we raise will be institutional. But I like the community fundraising because it democratizes these early stage opportunities and something a lot of people believe in. So I'll just say that first. Now, as far as the milestones, really good question. From the time we closed the WeFunder round to the time we started the Start Engine round, which is what we're on right now, we closed out our phase 1 trial and we put our investigational new drug application on file with the FDA, and the FDA cleared us into phase 2 pediatric autism and adult autism. So that phase 2 entrance for drug development is one of the larger milestones that it will ever hit. So it shows that our team was able to execute both on characterizing the drug, because the FDA is not going to let you go into a trial like that, especially in pediatrics, unless you can characterize the molecules in the drug. You have a good phase 1, as well as lots of other non-clinical, preclinical studies that we had to perform in the meantime. So our team has been meeting every milestone like we've planned, really, from chemistry, manufacturing, controls through the clinical trial process. And now it's about continuing to raise funds. These clinical trials are very expensive, I'll say.
Try to dig more a little bit on your second drug. So, you use the complex language. I think for audience, I'll just say that it's mushroom based. There's way more than that to it, but just to get the image. I'm wondering how many companies in the United States are authorized to grow and develop medicines based on the same plant.
Yeah, so for the psilocybin mushroom, as far as I know, we are the only DEA Schedule 1, that's the highest schedule. This is LSD, psilocybin, think of those types of psychedelics. As far as I know, we're the only Schedule 1 manufacturing registration that is working with botanicals. And of course, within the mushroom, and this is what I don't have time to get into in a short presentation like that, within the mushroom or within any one of these botanics or plants or fungi, are so many other compounds than the one that, in that case, everyone thinks psilocybin. So the majority of our competitors, there are some with DEA Schedule 1 licenses, they're isolating psilocybin or they're synthesizing psilocybin, which that's a conventional single molecule drug. There are many other, they're called tryptamines, many other molecules that work like psilocybin that create a different experience. And we believe many of those molecules within a botanical medicine help to offset the side effects. And that's why with those single molecule drugs that 99.99% of our drugs are, we experience substantial side effects. Sometimes they work, but sometimes we have to take other pills to combat the side effects. We believe that these botanics, in the case of psilocybin and cannabinoids first, we're leading with those. We believe that they can represent potentially a higher level of efficacy or just as high with mitigated side effects. That's kind of what we're going to prove out.
Awesome. Well, we've got everyone pitched here today. We will get emails out to everybody with information, links, and all the things. And I'm sure Sam will throw a poll in there to find out which one of these awesome companies you guys liked the most or were most interested in. And of course, if you want to be connected to any of these people, I'm sure we can facilitate that as well for more direct investments. Either way, I would highly recommend going to kingscrowd.com and looking up the individual company pages where you'll find out everything you would need to know about making an investment in this company or in any of these companies. And again, if you want the detailed research that Leah and her team are responsible for, you have to become a paid member. And I think you will greatly appreciate that. And I know that we would as well. So I would like to, on behalf of everyone who pitched today, as well as Leah and Sam, who put the hard work in, and Chris M., who also put in hard work to make this happen, I would like to thank everyone who attended today, and hopefully you guys will continue to attend these events and we will host more of them. So thank you very much.